Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Russia is said to be close to a deal with Syria's new leadership to keep two vital military bases in the country. We will bring you the latest. Beijing signals increased borrowing and spending to boost consumption, as well as raising the fiscal deficit. But investor disappointment sends Chinese stocks and commodities, including iron ore, slumping. Plus, approval ratings plummet for South Korea's president as the opposition begins a second push for impeachment. It's just gone 8 a.m. across the Emirates. I'm Joanna Bersace in Dubai. Happy Friday, everybody. Rounding up the week, and what we had was a pullback for Wall Street yesterday. Both the S&P and the Nasdaq ending the session in the red, down about 0.5%, 0.7%, respectively. Taking a close look at some of the data that has come through this week. Yesterday, we had higher than expected jobless claims data, though again impacted by the timing, some seasonals to do with Thanksgiving. We also had much hotter than expected PPI data, a bit of an upward tick in food prices, including egg prices, which was one of the catalysts for the upside surprise. But the reason I bring this all together is there's been a bunch of back-to-back data coming out of the U.S. this week, including that all-important CPI print coming in line with expectations, really cementing the case for interest rate cuts next week out of the Fed. So futures today not doing a whole lot. Nasdaq leaning towards the green again, up about 0.25%. Iron ore in focus. Why are we talking about iron ore today? Well, the commodities complex, including the likes of iron ore, down 2.4% today. Chinese equities, Hanover, very weak as well. This on a case of buy the rumor, sell the fact. We've come to the end of that working economic conference taking place in China. Lots of hints about policy to come, but still thin on detail. And perhaps that is why we're seeing a pullback in some of these Chinese exposed commodities and indices. And then let's turn to the euro. And here we are this morning, trading shy of 105, 104.60 is where we're at. And, of course, comes on the heel of that ECB decision yesterday, the ECB cutting rates for the fourth time this year, now taking the deposit rate to 3%, but also removing the language around keeping rates sufficiently restrictive for as long as necessary. So the markets initially didn't really know how to read this, but ultimately it is a dovish, it was a dovish press conference by the ECB President Christine Lagarde. Here, it's interesting just to highlight the differentials in rates that are going on now in terms of what the markets are expecting the Fed rate to be versus the ECB policy rates. And you can see from this chart that the markets are pricing in a much swifter and deeper rate cutting cycle out of the ECB in Europe than they are for the Feds. And clearly that's going to have an impact on both equity markets and also the currency as well. So bear that in mind. All right, on to our geopolitical news this morning. Russia is said to be nearing an agreement with Syria's new leadership to keep two vital military bases in the country. Bloomberg has learned talks are taking place for Russian forces to remain at the naval port in Tartus and the airbase in Khmeimim. Sources say Moscow believes it has an informal understanding with Hayat Tahrir al-Sham that it can stay at the Syrian bases. So for more on this, we bring in Bloomberg senior reporter Sam Dagher. Clearly, these bases are of strategic value to Russia, and it feels as though, or looks as though from our reporting, that they've managed to strike a deal with Hayat Tahrir al-Sham.
Yeah, I mean, we're being told that this is not done yet, and they have an informal understanding from Hayat Tahrir al-Sham, which is the main Islamist group that's now leading this interim government in Damascus that they themselves established, that no one yet recognizes. Let's be clear about that. But people are hoping that they're going to be doing the right things. Obviously, the Russians have their interests. Let's also remember that the Russians, when they intervened in 2015 to save their ally Bashar al-Assad, they actually bombed all of these rebels, including Hayat Tahrir al-Sham and Idlib. I mean, bombed them intensively. So there's a lot of bad blood between Russia and these fighters, but these fighters are being pragmatic, and also Russia's being pragmatic, I think, because let's remember the fighters now control all of Latakia, where the air base is. The fighters control all of Tartus, where the naval base is.
Right. Well, it serves to underscore that for Russia, this was never ideological. It's purely about strategy. That's the way Russia has operated in the region. Speaking of other major powers, U.S. Secretary of State Antony Blinken has been in the region once more. And we've talked about the U.S. only having, say, 800, 900 troops stationed in Syria. What sort of leverage do the United States have over the developments in Syria from this point onwards?
Yeah. I mean, let's also remember that the U.S. supported the opposition that rose up against Bashar al-Assad in 2011. I mean, it supported them, it funded them. It also backed and armed and trained some of these rebel factions. It was calling them at the time moderate rebel factions that were actually standing up not only to Bashar al-Assad, but also to people like Hayat Tahrir al-Sham, who were very much on the militant side back then. So, but they decided to, remove themselves from all of that when they focused on the fight against Islamic State, when it captured, large territories in Syria and Iraq.
Yeah.
So now they're back in the picture, and I think they do have leverage because, international recognition. I mean, these rebels and this interim government needs that.
Yeah. How should we think about the relationship between U.S. and Turkey insofar as the U.S. have lent their support to some of the Kurdish troops fighting up in the north, very close to the border with President Erdogan, Turkey obviously emerging as one of the key power brokers now?
It's a very complicated relationship. And from the moment Erdogan came to power, we've seen, similar complications in Iraq when the U.S. went in and toppled Saddam Hussein. Now, I mean, similar complications in Syria from the moment, the uprising happened against Bashar al-Assad. Obviously, the U.S., as I said earlier, focused on the fight against Islamic State. So it said, who's the best situated force that I can partner with? And it was these Syrian Kurds who do have ties to, I mean, even though they go out of their way to say no, but they do actually have ties to the PKK, the group inside Turkey that Turkey has been fighting for decades. And it's a very complicated picture. The U.S. is saying no. Now they're thoroughly a Syrian entity. But I think also the U.S. will be talking to Turkey about the government that takes shape in Damascus, because Turkey is taking the lead role in that, and it sent its spy chief, Ibrahim Kalin, to Damascus. I mean, he went into the Umayyad mosque yesterday, the same mosque where, HDS leader al-Julani went, the moment he entered Damascus.
Yeah, so many things are going on concurrently. We're going to continue the conversation now. That was Sam Dahed, Bloomberg senior reporter. Thanks for that. But let's continue talking about the developments in Syria. I want to bring in Ayman Abdelnour, the founder of Syrian Christians for Peace. And it's good to have you with us on the show. I know that in the past you actually were part of the Ba'ath Party. You advised the former regime, and of course you moved to the opposition towards the early 2000s. I'm just curious now, if you look at all of the developments that have happened in the last 10 days, and some people will say that it goes back as far as 14 years, or others will say that it goes back as far as 5 decades in terms of how long it took to get rid of the Assad regime, so to speak. But when you look at the fact that Bashar al-Assad himself was able to flee the country and escape with impunity in Russia, how does that make you feel?
Allow me first to start with congratulations all the Syrians from your audience and all the Syrians from all over the world. As for your question, it's really some were expecting it that Russia will do that, protect its allies, because they have that habit that they call themselves that if you are our allies and if you took the phone, we will answer. Not like the Americans, they might not answer. So some expected that this to happen, but we were expecting that he will not be able to flee before the rebels arrive to Damascus and cover and close all the roads. That's the problem that all the Syrians now are asking Russia to deliver him to the Syrians, even if it's not now, maybe for the next government when we'll have a judiciary system and a new government.
Were you surprised at how easy it was for the rebels over the course of 10, 11 days to make the passageway all the way to Damascus, and essentially how little of a defense the Assad regime and forces put up?
Correct. That's not only me. That's shocking also for a lot of countries, including US. And even the same rebels leaders, they were expecting only to arrive maybe to Aleppo. So with that Turkey can, and the rebels can push Assad to go to the negotiation table to start implementing the political solution under UNSC Resolution 2254. But then everything was collapsing fast. Assad didn't have real army. They were turned into, after 13 years, into like mafia. So every unit, it runs itself, by itself, depending on Captagon production, also kidnapping people, stealing, looting, so that it was like a cartel of mafia. So this is why they don't fight. They didn't fight. Everything was collapsing. All the, I think the people were killed during all this, maybe around 600, 700 only. So everything was collapsing, and the Assad lost control on them.
How do you feel about this new interim government led by Mohammed al-Bashir? Do you have faith that they will not replace one form of absolute rule with another type of absolute rule?
Yes, we have problems and concerns, especially the minorities. And this is where we also, all the Syrians met the American demands for the new government. Number one, that it should be inclusive from all the component of Syria and from all governorate. So they shouldn't be from one color, from one religion, from one governorate, which is Idlib. Also, it should include all the minorities. This is number two. And it should be also depending on human rights and depending that all Syrians participate and deliver their voices, free media, free elections. And this is all should be, but we cannot expect them to do that all in 1 month or 2 months or 3 months. They are new, they lack the expert, but the good issue that they have ears that listen. They know that they don't have all this expert to run a country very complicated internally, domestically, regionally, and internationally, like Syria. So this is why they have open ears. They asked all the expert consultants to come to advise them. So this is a good step. Till now, there's no one accident reported about anything committed against Christians or Ismaili, Druze, Alawite civilians, or churches or temples. So this is a good start, but we start now asking for more.
Over the course of the last couple of days, Israeli forces have been engaging in heavy airstrikes targeted at Syrian military infrastructure. Per the IDF, 80 to 90% of Syria's defense capabilities have been wiped out. What does that signify looking ahead with the process of rebuilding and the fact that there is going to be a large Arab country with essentially no capability to defend themselves because their military infrastructure has been completely wiped out?
Correct. This is a main concern, but we need to understand what is the real situation on the ground. It's now rumored that this is a part of the deal, that Israel will not jam the plane that took Assad to Hmeimim base in Tartus and then from then to Moscow, in exchange that he will deliver all the places that he hide chemical weapons, that he hide the correspondence between his regime and the Israeli army, plus where all the inventory of his strategic missiles. And this is why Israel targeted 10 places. And plus, I can tell you that some people might think that we have a real advanced, developed new army. The last time that the Assad regime, including Hafiz al-Assad, bought planes was 1984. And new tanks was in late 90s, so 1997, 1998. So just imagine, is this now you can fight, an army can fight with this expired military planes and expired military tanks? So they are hitting something that may cost them more than what they are hitting. So it's not a big, now we are looking to build an army that can protect the Syrians, not build an army to kill the Syrians. Yes.
Yeah. Well, an interesting hypothesis if, of course, it is confirmed. But thank you for coming on our show. Ayman Abdelnour, founder of Syrian Christians for Peace. We appreciate your perspectives. Well, coming up, we discuss U.S. outperformance in global markets with Nomura Asset Management. This is Bloomberg. Well, Asian equities are under pressure this morning with the lack of details from a Chinese economic conference disappointing some traders. Risk appetite also fading ahead of next week's Federal Reserve policy meeting. Let's bring in Tarek Fadlallah, CEO at Nomura Asset Management, Middle East. So we've had a bunch of data coming through from the U.S. this week to dissect. CPI was the big one. PPI upward surprise yesterday, cementing the case for a rate cut next week. But what about for the rest of 2025?
Good morning, Jemana. So, yes, the outlook remains fairly stable for the U.S., I would say. We've been expecting a cut in December, and that looks like it's getting done next week. And then we're expecting, or the market's expecting, another 100 basis points into next year. So no change really for the last 2 or 3 months.
Yeah. What about stock market outperformance? S&P tracking 30% gains this year. How are you thinking about the possibility of that being repeated in 2025?
Well, I mean, first of all, wow.
Yes, I should have started saying wow.
Nobody was talking about 6,000 on the S&P index at the end of last year.
Yeah.
And so, the expectations are surely that, we're not going to repeat that kind of spectacular performance. But, the outlook remains relatively solid, I would say, for the time being. The risk, of course, is a recession, but there's no indication of a recession at the moment.
Yeah. To what extent do you think is liquidity going to be driving market performance next year? The reason I bring this up is in your research piece, you talk about trillions of dollars waiting to be deployed from money market instruments.
Yes, I mean, interest rates have been very high recently, as you know, and money market AUMs, assets, have rapidly increased in the last 18 months or so. And there's a lot of liquidity there waiting to be deployed into risk assets. So that may help underpin the equity markets into next year.
Yeah, okay. So that could provide a possible tailwind. Let me just ask you about where else you think that money will find a home. If we're in an environment in the U.S. where inflation proves to be tricky, what's the thesis to buy fixed income?
Well, the thesis is that U.S. rates in particular are relatively high compared to rates elsewhere in the world.
Yeah.
You've been talking this morning about the ECB. Rates, 10-year rates in Europe are somewhere between 2% and 3%, and the 10-year Treasury is 4.25%, around 4.25%. So that's a pretty good yield. Just remember that not that long ago, Austria was issuing zero-coupon bonds for 50 years, and British insurance companies were getting into all kinds of trouble trying to reach certain yields by levering and doing structured notes around it. So I think the fact that you have real yield pickup in U.S. Treasury actually is pretty interesting.
Yeah, it's interesting, especially when you've got an environment where the likes of S&B are cutting 50 basis points, getting closer back to zero again.
Correct.
So Europe may look very different in 1 year's time.
Absolutely.
Let me just turn it back to the region. Yesterday, the IEA put out their report saying that even with the OPEC Plus extension of the decision to put back extra barrels to the market, they still see the oil market oversupplied next year. How do you read the impact that that's going to have on oil prices, or is it fully priced in?
No, it's not fully priced in. I mean, obviously, the sentiment has been relatively cautious, even maybe pessimistic for oil, but it really all depends on China. China has accounted for 2/3 of all the growth and demand that we've seen this century in oil. And so if China weakens, as we suspect it might next year, that's going to have real impact on demand globally. And so, 60s is definitely an area that we should expect oil to, to touch and to be range bound within into next year.
I was at Abu Dhabi Finance Week this week, and it really is refreshing almost to see how many people are flying here. They're really excited about the prospect of opportunities around here, growth in non-oil sectors. If oil actually does drop to low 60s or even to 50 handles, what does that do to the region in terms of growth profile, do you think?
Look, we've done a great job in the region of diversifying away from oil, but we're not there yet.
Yeah.
And so for the time being, oil prices are consequential to the economic outlook for the region. That's the reality.
Yeah. So when you look around the world right now, given what you say about cautiousness on China, relative bright spot Middle East, cautious on Europe, U.S., probably, will continue with this mantra of U.S. exceptionalism. How do you want to be positioning your portfolio then?
Well, there are 2 or 3 bright spots around the world. Japan is up 20% this year.
Yeah.
India remains a buoyant market. So there's a little bit that you can sort of cherry pick within this rather dull outlook. But I also like, bonds. We've spoken about U.S. Treasuries, but also emerging market local currency bonds. I think the dollar may have seen its peaks or will be seeing its peaks shortly. And so there's an opportunity to play the currencies, if you like, on the local currencies in the emerging markets.
Any particular jurisdictions that you're looking at?
Just Asia.
Yeah.
Asia, I think, is where to be.
Yeah. Are you concerned that with the return of the Trump administration, any focus on tariffs, though, that could be a potential point of derailment for some of these long Asia trades?
I think with the exception of China, not so much. We'll wait to see to what extent President Trump is setting the benchmark and expectations on tariffs. So there's rhetoric and action. So let's wait and see.
Yeah. Okay. Yeah. Nobody knows. I think the President-elect himself probably doesn't know what it's going to look like. Tarek, great to have you on as ever. Tarek Fadlallah, CEO at Nomura Asset Management, Middle East. Well, still ahead, the South Korean president's approval rating drops as he defends his declaration of martial law and fights against impeachment efforts. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Now for a look at some of the other stories we're following this morning. The CEO of Klarna has told Bloomberg his company stopped hiring a year ago as it invested in artificial intelligence that's doing the work of hundreds of staff across the firm. The Stockholm-based buy now, pay later finance provider has seen the headcount fall by more than a fifth during that time, mostly through attrition. It says about 200 people are now using AI for their core work. Donald Trump's economic advisors have told Bloomberg they are considering doubling the U.S. state and local tax deduction known as SALT. Economist Stephen Moore, a member of the president-elect's transition team, says the tax break could go from $10,000 to $20,000. The deduction is popular in high tax states like New York and California, but it is expensive to maintain. And Broadcom shares jumped in late New York trade after it predicted a 65% growth in AI chip sales in the first quarter. It also sees a $90 billion market for the AI components it designs for data centers by 2027. Investors have piled into Broadcom stock this year, betting that the AI craze will fuel a sales surge. And a look at equity futures as we head to the break. Not doing a whole lot. Nasdaq leaning towards the green, up 0.25%. Euro Stoxx futures down about 0.2%. Coming up, U.S. Secretary of State Antony Blinken in the Middle East to discuss Syria's transition. We'll have more of that and more later on with the founder of ZIEMBA Insights. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories today. Russia is said to be close to a deal with Syria's new leadership to keep 2 vital military bases in the country. We'll bring you the latest. Beijing signals increased borrowing and spending to boost consumption, as well as raising the fiscal deficit. But investor disappointment sends Chinese stocks and commodities, including iron ore, slumping. Plus, Europe's central banks take a dovish turn to aid their economies. Both the ECB and SNB cut. We get Bank of England and Norges Bank decisions next week. And let's not forget about the Fed as well. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Let's get through these markets quickly. We saw a bit of a pullback for Wall Street yesterday. Higher than expected initial jobless claims and also higher than expected PPI data. But that being said, we are still looking at a rate cut of 25 basis points for next week. What happens next, I guess, will be a function of the language that comes out of that Fed statement next week. But all eyes are turning to that next. Iron ore in focus overnight. Commodities, mainly some of the industry-heavy commodities like iron ore have been slumping, down 2.4%. This after a week handover from Chinese equities. We're going to talk more about what's going on there with our correspondent Rebecca in a short while. But this is just to tell you that the handover from Asia has not been so pretty today. Euro Swissy also in focus. Why do I bring that up? Well, we had 2 interest rate decisions yesterday. The ECB cut 25 basis points, removed restrictive language. SNB cut 50 basis points and are sounding increasingly dovish. They're at 50 basis points now. So lots of people are talking about what they can do to stem the appreciation of the Swiss currency, that safe haven currency. So this is the picture for a euro Swissy. And then this is a chart that we were talking about earlier. Now there's increasing amount of central bank diversion between what people are expecting the Fed to do next year versus the ECB. Interest rate differentials are moving wider and wider. All right, U.S. Secretary of State Antony Blinken is in the Middle East as the Biden administration tries to shape the unfolding situation in Syria before Donald Trump returns to the White House. Blinken started his visit in Jordan, where he met with King Abdullah and Foreign Minister Ayman Safadi. He's also been in talks in Turkey for talks with President Recep Tayyip Erdogan, saying the transition must be led by Syria. So much going on. Let's bring in Rachel ZIEMBA, founder of ZIEMBA Insights. Good to have you with us in person. Blinken is in the region on another trip, presumably his last trip now before the official handover takes place. How do you see the events in Syria over the weekend affecting the overall security situation in the region?
Yeah, well, I think he's probably going to be on a plane back to the region probably in January, if not in December, with the pace things are going. He's been pretty much living on a plane lately. How are things going? We've seen a lot of players try to shore up their interests and some good noises out of the Syrian, those who are trying to formulate the government. But this is going to be really tough. And I think Donald Trump has said this is not the Americans' fight. I think he's really going to be looking to allies in the region and is sort of stepping back. And he's waiting in the wings with what to do about Iran. Where the Biden administration is concerned, they're trying to stabilize the region, but they're also trying to give the Ukrainians some advantage on that front. There's a lot that can happen still in the next 2 months.
Many people are saying the fact that the Assad regime fell so quickly in the last 10 days was reflective of the fact that their allies didn't show up, neither Iran nor Russia. And I do wonder whether the Biden administration is going to capitalize on this moment of weakness for Russia. There were talks in the last couple of days that they're weighing potential new sanctions on oil. Do you think those actually will come into fruition?
So I think Biden administration has been trying to use this space for the last couple of weeks, right? We saw them transfer some more money to the Ukrainians, some more weapons, what they can do without more congressional approval. On the oil side, we saw them cut off Gazprom Bank, make gas trade more difficult. What's interesting now, I think they will do something more, but the fact that it's leaked in the press, very good reporting from your Bloomberg colleagues on the website side, but the fact that it's leaked in the press, in my mind, says that they're also hoping that traders are cautious and they over-comply. So I think it will tighten markets a bit, but I don't think they're going to go for a nuclear option or to try to cut off all Russian energy trade.
What does it tell you about how the U.S. perceives the state of the oil market, that they're even weighing, considering imposing extra sanctions, right? Because they wouldn't do that if they anticipated it to cause a massive upward move in the price of oil.
100%. And Janet Yellen herself made some comments that there was space to do something more on Russia. Her definition of something more is probably something more targeted and incremental. They see that there is a slack in the oil markets. Of course, that slack sits in this region. It's in Abu Dhabi. It's in Saudi Arabia. And these are countries that are pretty committed to keeping Russia in the OPEC plus fold. So if there's a real outage, of course they will act. They would love to unwind their cuts, right? We've spoken about that. But I do think in this context, the U.S. feels they have a little more space and that they are worried about what kind of deal the Trump administration might strike. So they're doing what they can. But what's, I think, really important is not just cutting off Russian revenues, but really trying to, in their view, help Ukraine make some advantages on the battlefield. And that's going to be challenging. The fact that Russia didn't show up in Syria, the fact that Iran was afraid about Israeli airstrikes, I think that reflects those countries focusing on their own core interests rather than on Syria.
It is, remarkable that in this part of the world, it's almost that there's a two-speed Middle East. There's the Middle Eastern conflict, and then there's the GCC region. You and I were both at Abu Dhabi Finance Week earlier this week, and I sensed so much excitement about opportunities here. People are really excited about the oil sector, growth in that space. What were some of your takeaways?
Yeah,
in the context of everything that's happening geopolitically?
Sure. I mean, look, I think in the context of everything in the region, the UAE is really still a place where people from the region come both to trade and to invest and then to reinvest somewhere else, right? What struck me about everything going on at Abu Dhabi Finance Week was the way in which Abu Dhabi was positioning itself as a place for companies from the region, from Africa, and fintech entities from around the world were coming and setting up there and then doing operations elsewhere. And the UAE also has been signing all of these comprehensive economic partnerships agreements. They're up to over 20 countries now. The UAE is really, I think, trying to think of itself as a place where it uses its own capital, but it also pulls in some other capital. That's maybe happening a little less so, but that it is trying to also be a place where there's some value add to trade, not just a re-export hub. And that, I think, is unique at a time when more barriers are coming up. And that does mean, though, that there are going to be some challenges and compliance issues ahead.
Yeah.
But there's a big vision and, interesting times, and important for us as economists to see and assess where the risks are.
Yeah. No, it's fascinating. I definitely got that sense as well. And their own motto is capital of capital. But of course, that's the one they designed for themselves.
It is, but I think it's one of those rare slogans that, holds some water. We'll see what happens to the Falcon economy, how much it can grow, but see, good times.
Yeah, Rachel, always good to chat to you. Rachel ZIEMBA, founder of ZIEMBA Insights. Thank you. Now, moving on to another part of the world, South Korean President Yoon Yeol's approval rating has fallen to the lowest level since he took office as he tries to push back against impeachment efforts. For more, let's bring in Bloomberg's The Asia Trade co-anchor, Sherry Ann. Sherry, first of all, really interesting that his approval ratings are so low, even though he's still technically in office. How's the reaction been in markets?
We have seen the market starting to stabilize, and perhaps not surprising given how financial authorities have been out in force the last few days. We saw the Kospi regaining almost all of the losses since the martial law declaration. The finance minister today talking to credit rating agencies as well as foreign companies, telling them that they would do anything needed to support the markets and the economy. But you said it, President Yoon's approval rating at a record low, and this as we're headed towards another expected impeachment vote on Saturday, with a higher likelihood that he'll get impeached. More ruling party lawmakers now hinting that they will support it.
And you just interviewed the South Korea culture minister. I know you've been interviewing many politicians around South Korea the last couple of days. What did he have to tell you?
The culture minister has come to the forefront of South Korea's government politics right now because he's also the spokesperson and one of the few people that perhaps is not being questioned about their relationship and participation to the martial law declaration. He told us that he was also shocked because of the martial law declaration as everybody else in the world. He reassured us that right now he's not seeing an immediate impact when it comes to tourism in South Korea. He's been talking to foreign government officials as well to reassure them that it's safe to visit the country. He also left some encouraging words about the strength of democracy in this country. Take a listen.
I think it is very crucial that any expression can be voiced. That's another form of democracy, where people can come out in the square and talk to each other without being hindered, speaking out at ease. Once this time passes, there will be a time when they can communicate well among each other. Of course, at first there will be a gap, so they may clash, and the voices may become louder because of different opinions. But in the end, they will continue to clash and exchange views with one another, and through this process, they will get to bridge the gap and communicate. Of course, it can be a disadvantage on the one hand, but on the other hand, it is a very strong point that democracy is guaranteed and it's working properly.
Minister Yoon was a bit concerned about some festivals being downside here in South Korea only because of the political noise, that people are not really in a festive mood. But he wants them to continue to bring up the sentiment here among the South Korean people as we head towards the holiday season. He was also encouraged to see that everybody's still out in force about democracy in the country. And he wants other people to know that it is safe, that everything is operating as normal. And when it comes to Korea content, to Korea K-pop, K-content, K-music, K-beauty, that doesn't matter which administration is heading South Korea, that those initiatives to support it will continue. Jumana?
That soft power will continue for sure with K-pop. Bloomberg's Sherian, it's always great to have you on our show. Thank you so much for the reporting. On to China now. Top leaders have set domestic consumption as their top economic priority for next year, trying to bolster confidence against the threat of looming U.S. tariff increases. For more, let's bring in government and economy correspondent Rebecca Chun-Wilkins, who joins us from Hong Kong. Markets are sort of reacting disappointed today. Why is that the case? What did we learn from the Central Economic Work Conference, and why was it not enough to bolster markets?
Well, it's ultimately about the absence of details here. What markets were hoping for is to see somewhat a sort of abnormality actually from this Central Economic Work Conference, which doesn't normally give out many details. But investors wanted to see more signs, more concrete signs of the kind of support that the Chinese authorities might be turning to boost the economy in 2025. What we did get was this focus, a very clear focus, in fact, on consumption. It's really the second time in the past decade that we've had that emphasis and this priority on boosting demand. We also had this promise for more borrowing and more spending when it comes to public spending in particular, as well as a promise for a potentially higher fiscal deficit and to strengthen the social welfare system. The last two factors are more of a reiteration of what we've already heard, but really investors, as they digest this news, are just wanting more details. So part of the Central Economic Work Conference was actually trailed by this December Politburo. We had details from that earlier this week, and I think that helps sort of add to this expectation that we might see some more language around the sort of so-called extraordinary measures that might be taken to boost the economy. I will just say, though, typically we do actually see things like the CSI 300, for example, that index actually fall in the week after the Central Economic Conference. So this sort of period of anticipation ahead of the conference and a pare back and a recalibration of sentiment following it is quite typical.
Yeah. Let's talk about the outlook for next year. Typically, they would set that in March. And this year, they set a growth target of 5%. Are they likely to stick with that 5% target in 2025, given all of the headwinds that you've just described?
Yeah, I think the expectation does look like for the moment that they will stick with that about 5% target. And that about word is quite important. And officials do use it to sort of give themselves a bit of wiggle room here. Maybe it's 4.7, 4.8. And that still, for them, is sufficient to meet that target. But we have also had these sort of more vocal voices, other economists, for example, those who previously advised the government, highlighting some of the challenges here. We had the chief economist from SDIC, Securities, for example, at a talk at the Peterson, pointing out that, that 5% figure, if we meet it, probably overstates the actual GDP. His estimate is that going forward, we might see something more like 3 to 4%, and that, in fact, in the prior years, particularly including during the pandemic, that level was more like 2%. That economist was also the same who went viral earlier this month, talking about the lifeless young people in China dragging down that consumption. So there is this sort of growing consensus and more of these, I would say, critical voices coming through, particularly going viral on Chinese social media, finding quite a resonance among that audience of young people who are struggling with, for example, fairly high joblessness rates. We had a record number of graduates coming into the job market. So it is certainly challenging. And the big question for Beijing is whether or not they can get people spending again. It's going to be absolutely critical, particularly as Beijing thinks thinks about how to approach this looming trade war. Essentially, they're trying to create this buffer and trying to replace that overseas demand by stimulating demand at home. And that comes as we see this continued crisis and this continued slump in the property sector, this anticipation of problems with exports and a pullback in exports as the US and other countries, either raise tariffs or try and to avoid being sort of overblown and overwhelmed with Chinese exports. And so really that third key pillar for China, domestic demand, very, very much in focus for policymakers.
Yeah. Rebecca, excellent reporting. Thank you so much. Government and economy correspondent Rebecca Chun-Wilkins. And coming up, Ethiopia and Somalia have agreed to lower tensions on a Turkey brokered deal. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. Ethiopia and Somalia have agreed to lower tensions over a deal that would allow Ethiopia to build a military base in Somaliland in exchange for a stake in Ethiopian Airlines. The agreement, brokered by the Turkish president, aims for negotiations to begin early next year. For more on this, Bloomberg's Simon Marks joins us now. Simon, interesting story here. Just bring us up to speed on the background to this story for those who are unfamiliar with the dynamics that are going on. Why is this potential broker deal by the Turkish president so significant?
Yeah, of course. Last year, on January the 1st, Ethiopia and Somaliland agreed a deal that would allow Ethiopia port access and a military base in the breakaway state of Somaliland. Somalia, which is just next door, considers Somaliland its own sovereign territory. And so this was a huge breach, according to Somalia, of its sovereignty. And so what's happened now in Ankara with the help of the Turkish president is that they've sort of been pulled back from the brink, it seems. And Ethiopia and Somalia have agreed to put to bed any of these contentious issues around, having a military base on Somaliland's coast. This whole deal had raised the prospect of renewed violence in the Horn of Africa between potentially Ethiopia and Somalia. And also there's a peacekeeping force fighting Islamist insurgents, Al-Shabaab in Somalia, and Ethiopian troops form a major component of that force. So this is being seen as rather positive in terms of making sure Ethiopian troops stay in Somalia to fight Al-Shabaab also.
I'm going to ask an obvious question here, but why is it the Turkish president who's mediating these talks?
Yeah, I mean, it's a good question because, you don't often see the Turks publicly mediating in such fashion. And Turkey has been a strong partner of Somalia for many, many years and recently has made a big push to have even more influence. So, Turkey runs the port in Somalia, has a concession to operate the port there. They've also got a military presence training the Somali army and recently sent a research vessel to the Red Sea to look for oil and gas. So this is really, part of Turkey's effort to make bigger push into Africa to ensure energy security, first and foremost, and also just to, have more of a role militarily also. We've seen Bayraktar drones from Turkey used in Somalia, for example.
Yeah, excellent story. Thanks for the reporting. Bloomberg's Simon Marks, thanks very much. Well, coming up, Central Bank's Bonanza. We get rates analysis with our Markets Live team next. This is Bloomberg. Okay, let's round off the first hour with a focus on the central bank action yesterday. We saw a surprise 50 basis point cut from the S&B and a less surprising 25 basis point reduction by the ECB. Let's get some analysis with Bloomberg MLive's Van Ram. ECB cut 25 basis points again, removed the language about being in restrictive territory. What do you think they do from here onwards?
I think they will go gradually, Jumana, but I think that, what is interesting is what the markets are thinking. As recently as at the start of this month, the markets were factoring in a terminal rate of, say, 1.6%, which is not happening. After yesterday, they're still factoring 5 rate cuts from the ECB in the remainder of the cycle. If that is right, it'll take the ECB's terminal rate below 2%. Now, juxtapose that with the ECB's own economic projections. They think that headline inflation, is going to hold just a tad above 2% next year. And more importantly, they think that core inflation is going to be 2.3%. Now, a core inflation of 2.3% is incongruous with the terminal rate of 1.75%. So there is no way the ECB is going to cut rates as much as the markets are thinking. If you remember, Jumana, at this point last year, the markets were factoring in 8-9 rate cuts for the Fed. And it reminds me, the current pricing reminds me of that situation where the markets are thinking that the ECB is going to go throw the baby out with the bathwater, and it's not happening.
Yeah, interesting you say that, but she didn't want to get into the conversation around the neutral rate.
She didn't want to get into the conversation around the neutral rate, absolutely right. But she did mention that it is probably risen higher than earlier. And according to the ECB's own estimate, the upper end of the neutral rate is going to be somewhere around 250. And if it has risen, it makes sense that they will go with the top rate, which is 250, being an unobservable rate. So you know what? The ECB could go to 250, maybe 225. But 175 is pushing it too far. It's not happening unless there's huge tariff.
Gonna leave it there. Yeah, so too much priced into the ECB curve. Good way to end the first hour. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Russia is said to be close to a deal with Syria's new leadership to keep 2 vital military bases in the country. We'll bring you the latest. Beijing signals increased borrowing and spending to boost consumption, as well as raising the fiscal deficit. But investor disappointment sends Chinese stocks and commodities, including iron ore, slumping. Plus, approval ratings plummet for South Korea's president as the opposition begins a second push for impeachment. Good morning again. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it has just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And welcome to Friday, of course, Jumana.
Jen, I'm actually going to pick up this hour by asking you a question and whether you picked up yesterday on the fact that egg prices in the U.S. jumped 55% versus the prior month. And so that is the upside surprise for the PPI number yesterday. Many people were talking about it, but eggs seem to be very, very expensive in the U.S. right now. I'm not sure it's going to have that much of a long-term impact on markets, but I thought I'd just start the show with that little tidbit of information. Anyway, this is the look at futures this morning. S&P and NASDAQ not doing a whole lot, but we are leaning towards the green. The NASDAQ up 0.3% after that pullback yesterday. PPI, now you know why, came in higher than expectations. So did jobless claims. But after CPI coming in line the day before, it's pretty much a done deal that the Fed are going to cut 25 basis points at the next meeting next week. Iron ore in focus today as well. The commodities complex, the handover from Asia, pretty weak today on back of some weakness that we're seeing in Chinese equities. So as some of those industry commodities are struggling, iron ore down 2.3%. And then euro also in focus, shy of 105 now. ECB cut rates 25 basis points yesterday, removed the restrictive language. So the tone is really set for them to continue along with these gradual rate cuts. Whether they go for jumbo rate cuts next year will be a reflection of the economy. And this is why I bring it up. Expectations of Fed policy versus ECB policy are really diverging here. This is what interest rate differentials look like, which explains some of the underperformance of the euro as we head into 2025. So there you go. Markets price the Fed rate 200 bips higher than ECB in 1 year's time. And And the U.S. Secretary of State is in the Middle East as the Biden administration tries to shape the unfolding situation in Syria. Antony Blinken started his visit in Jordan and has been in Turkey for talks with President Recep Tayyip Erdogan, saying the transition must be led by Syria. Meanwhile, Turkey's spy chief Ibrahim Kalin visited Damascus yesterday in a rare public appearance by the country's top intelligence official. For more, let's bring in Honor Ant, managing editor for the Middle East and North Africa. Honor, just give us some insight into what these conversations are going to be about. Blinken has been in the region. Obviously, Turkey, as we've spoken about, have become a huge power broker in Syria in terms of what happens next. What are they likely to be talking about?
Blinken arrived in Ankara, the Turkish capital, yesterday, just a little before expected, and he met immediately with Turkish President Erdogan. As you said, after the meeting, the public readout was about basically Blinken and Turkey calling for a transition in Syria that would be led by Syrians and that the country should be partitioned in smaller pieces. So they seem to be agreeing on that, but that's where pretty much their common interests or common language comes to an end. Turkey and the U.S. have a major difference, a disagreement in Syria, and that is the future of the U.S.-backed Kurdish rebels in terms of the location where they will be and what kind of part, if any, they will play in the future of Syrian politics. So that's what the discussions between Blinken and Turkish authorities will be about over the next coming day. But just to remind you, on the issue of Kurdish-backed rebels in Syria, it looks like Turkish officials are really looking forward to what comes next in the U.S. once the Biden administration expires basically next month, and Trump's return to the White House, which Turkish officials see resulting in a huge change in their Syria in Turkey's favor or in line with Turkey's own expectations.
Honor, one of the questions that people were asking about HTS and this new transition government is whether they're going to be able to sort of corral all of these disparate groups, rebel groups together. How would you say is the relationship between some of these Turkish-backed rebel groups and HTS? Are they going to be willing to work with each other?
Well, that's what the Turkish government is not right now trying to achieve, and that's what that very public visit by Turkish intelligence chief Ibrahim Kalin to Damascus was all about earlier this week. Following the visit, or during the visit, Turkey for the first time opened its embassy in Syria after shutting it down in 2012, shortly after the Syrian civil war began in 2011. So right now, Turkey wants to make sure that with its political and diplomatic presence in Syria, the forces it backed, which were definitely a part of the march that resulted in toppling of Assad earlier this week, but they were not definitely in the lead, unlike HTS. Turkey wants those rebels to be a part of the political transition and have a say in the future of Syria, both militarily and politically. So that's what Ibrahim Kalin's visit was all about, and that's what the opening of the embassy is all about. But as you said, now that the rebels have gotten rid of their one common enemy that kind of united them around the same objective, will they really be able to get along as well as they did before? That's an open question.
And our own reporting suggests that Russia is close to securing an agreement with HTS to keep their military bases, the naval base and the air base in the country. What do we know about this potentially being agreed to?
Sure. I mean, just to be clear, obviously, with the new transitional government in place, the situation in Syria, Damascus, is very fluid. So it's unclear whether there is even a body in Damascus right now that can verify whether or not Russians have been able to reach such an understanding as they seem to be saying. But on the other hand, yes, there are talks, and they seem to be nearing an arrangement, an understanding, if not a formal agreement, to keep those bases in Tartus and in Khomeini in place. And that's a very important goal for Russia because of the distance between Russia and their military operations in Africa, parts of Africa. It's paramount. It's of paramount importance for Syria, for Russia to keep those bases in Syria, because that's pretty much the only naval base that they have in the Mediterranean. And yes, they are nearing an understanding, if not a formal agreement. HTS.
Yeah, and I would recommend to any viewers watching this to go back, if you can find it on the terminal. Our colleague Ondiro Ganga talked about the importance of those bases for Russia in terms of getting access to the African continent as well. So really good reporting there from the team. Honor, thank you very much. Honor Ant, Managing Editor for the Middle East and North Africa.
Now let's turn to the region. Ethiopia and Somalia have agreed to lower tensions over a deal that would allow Ethiopia to build a military base in Somaliland in exchange for a stake in Ethiopian Airlines. The agreement, brokered by the Turkish president, aims for negotiations to begin early next year. For more on this, let's bring in Bloomberg's Simon Marks, who is joining us now and has done extensive reporting on this. So, Simon, thanks for being with us. You and the team not so long ago were just reporting about the increasing tensions between Somalia and Ethiopia. What does this agreement do to the relationship between these nations?
Well, really, this deal brings both countries back from the brink. Since January the 1st this year, Ethiopia and Somaliland forged this deal, right, to have a military base on the Red Sea. Somalia was incensed that this was a breach of their sovereignty. And, you know, there was a threat of renewed conflict, violence between these two countries. And not only that, Ethiopian troops are embedded in Somalia fighting the Islamist group Al-Shabaab, and Somalia had threatened to throw them out. So this had really worried US, other partners, the Turkey themselves, that Al-Shabaab could gain a foothold in Somalia. So it's a pretty big deal. They're saying the right things. It's the first time the two leaders have met since Jan 1st. So it can only really be seen as positive. But analysts are bringing in a little bit of skepticism because, you know, Abiy Ahmed, the Prime Minister of Ethiopia, has of course endorsed Somali sovereignty in the past. So let's see where this goes.
And also adding in the factor of a Trump presidency potentially talking about Somaliland. Simon, when we talk about Turkey in particular, what incentive do they have to have brokered this deal? We know Russia and Turkey have been interested in pushing into Africa, sub-Saharan Africa. But what does Erdogan see? What does he get out of this agreement?
Yeah, Turkey has had a years-long presence in Somalia, and it's a bit of a test case for them in terms of how they can operate in other African countries, whereby they bring in military support and advice for the leadership, coupled with economic deals. And a few months ago, we've seen a large Turkish exploration vessel move into the Red Sea to look for oil and gas as they seek to bolster their energy security. And they've also got their hands on a concession on the ports. And there's other economic deals in the construction sector where Turkey is very, very active. And I think when you look at the security element too, Somalia uses the famous Bayraktar Turkish drone in the fight against Al-Shabaab. And they're there alongside US Reaper drones. You know, so it really sort of reflects Turkey's push to be a major geopolitical power in Africa, as other countries like the UAE and Russia are also seeking this end goal.
All right, Bloomberg's Simon Marks, thanks so much for your reporting. And we should note, Simon joins us on the Next Africa podcast this week to talk about he and the team's reporting. So appreciate you joining us this morning. Also, the semi-autonomous region of Puntland in Somalia is planning a new offensive to combat a growing Islamic State insurgency. A local security official in the mountainous northern region or Northern Territory says the Islamist group has more than doubled in size this year. It plays a key role in the global financial and operational network of the Islamic State. Still ahead, MacroVisor thinks the Fed will probably be looking at 2 to 3 cuts next year. We'll get their market strategy next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Asian equities are under pressure this morning with a lack of details from a Chinese economic conference disappointing some traders. Risk appetite also fading ahead of next week's Federal Reserve policy meeting. Joining us is Ayesha Tariq, co-founder of MacroVisor. So it's not just the Fed next week. We've got a whole bunch of others. We had the ECB and SCB yesterday. Attention, obviously, a lot on what these central banks are doing with the rate cutting cycle. But I wonder whether we're placing too much emphasis on monetary policy going into next year. You've argued that perhaps we should be paying more attention to fiscal policy drivers.
Good morning, Jumana. Thank you for having me back on the show. Well, yes, I think fiscal policy has been dominating for the last 2 years. What we've been seeing is a lot of fiscal spending. But what's interesting is as we enter 2025, we have a backdrop of a lot of leadership changes, right? So we know about 60% of the world's GDP went into elections in 2024, and that's obviously set the stage for a lot of changes, and which brings a lot of policy changes, one of the biggest being the US. And the US dominates in terms of policy. They're far-reaching. And I think, that's something that we need to keep an eye on for 2025, these changes in policies and what they may bring. And then how the central banks will respond to these policies will be something to watch.
So if you have fiscal tightening, should then the central banks be having to compensate for that by having to cut even more then? What are the ramifications on the central banks?
So what we expect is there will be some fading of the fiscal stimulus. However, we also think that there will be more targeted fiscal spending, right? So as that targeted fiscal spending and these policies continue, and we know many of these policies tend to be a little bit inflationary, that makes the job of the central banks a little bit more challenging. So yesterday I was listening to President Lagarde, and, front and center still remains inflation, right? So she talked about the threat of inflation, the threat of trade wars, and all of this, while dampening growth, also puts, inflation front and center. So we're talking about a sort of global stagflationary scenario here, which will make the path much more difficult for central banks, because with inflation higher, it becomes a little bit more challenging for them to cut too drastically.
Yeah, I just wonder whether Europe, because of the growth dynamics, and they seem to be in a much worse situation than the US are, whether that is actually going to lead to some deflationary pressures emerging, which you're not seeing in the US, in which case the market is vindicated in terms of continuing to expect US exceptionalism. What would derail that thesis?
So I don't think you're completely wrong here, by the way. So what we're seeing is sort of a dichotomy. So when it comes to the ECB, we think the ECB will still deliver 4 rate cuts next year. But the US, on the other hand, may have to pull back, right? And I don't think this thesis, so my view is this thesis will continue. We think US exceptionalism can continue in spite of fewer Fed rate cuts. And part of that has to do, with the fiscal policies and the strength of the economy that still remains because of corporate and, consumer balance sheets.
Yeah. Do you think China is going to provide a bullish or a bearish driver next year?
So we're hoping it's bullish, but we've been hoping for a long time, and obviously hope is not an investment strategy. However, this last meeting, it was encouraging in terms of what they want to do. Now, the other stimulus they did earlier in the year, it was encouraging. It was directed very much towards the local government debt vehicles, and that's where we do have a problem in China. It is a big problem there. So they're probably taking care of that first. Now, they have talked about further rate cuts in 2025. It always remains to be seen with China what steps they take. Honestly, we think that it remains a wild card. But if China doesn't take steps, then we are, prone to deflationary forces coming out of China.
Yeah. Ayesha, that's a good place to leave it. Thank you so much. And clearly a big focus for markets, even today, as we're looking at some of the price action coming out of these Chinese equities. It's a case of buy the rumor, sell the fact. Ayesha Tariq, a co-founder of MacroVisor. Thank you. Well, speaking of China, coming up, the authorities are signaling increased public spending and borrowing in 2025 to boost consumption next year. But will it be enough to meet growth targets? All the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. To China now. China's top leaders have set domestic consumption as their top economic priority for next year, trying to bolster confidence amid the threat of looming U.S. tariff increases. For more, let's bring in government and economy correspondent Rebecca Chung-Wilkins, who's joining us from Hong Kong. So, Rebecca, what did we learn from this Central Economic Work Conference? Many people have been waiting to get some details from officials. Did we get some?
Well, we did not get the details that some investors were hoping for, and that's reflected in some of the weakness we see in Chinese equity trading today. But we did get this quite clear clarity over consumption and the desire to vigorously boost consumption and boost demand across the board. It's only the second time in the past decade that officials have actually singled that out as a priority. And we also got this affirmation again that China is going to focus on more borrowing, more public spending. We potentially are going to have a higher fiscal deficit, potentially raise that above the sort of roughly 3% level. And also strengthening the social welfare system, which in China actually is relatively speaking, when we think about global comparisons, quite minimal. So not massively surprising. And I think in some ways the response from investors hoping for more was perhaps a little bit misjudged. We don't tend to get an enormous number of concrete details. But because of this expectation that officials have been somewhat more forthcoming about their plans for the economy since that September briefing from the PBOC and other ministries and officials in China, there was this hope that we might have more details about what the Politburo had earlier this week previewed as these sort of quote-unquote extraordinary measures that could be taken to try and boost the economy.
And that's for 2025, Rebecca. Are there expectations that for 2024 we could actually see China hit those growth targets that they had made? I believe it was 5%.
Yes, so China has this target of about 5%, and the about is important because it can sometimes do quite a bit of work. Officials would perhaps be happy if we got, say, a 4.6 or a 4.7. It's still in that range. I think the expectation at this point is that China will, at least on paper, meet that target, and that we're likely to stick with that target for next year, although economists have, through this year, actually been lowering their forecasts. There also have been sort of increasingly voices, even within China, economists flagging concerns about the economy, though. We did have, for example, a chief economist from SDIC Securities this week talking at the Peterson Institute and saying that actually the growth going forward, GDP, could be somewhere more like 3 to 4% rather than the official figure of 5%. And he pointed his speculation that 5% is perhaps overstated. He also said that looking back over the last couple of years, growth realistically, in his view, was somewhere more like 2%. So there is a sort of recalibration, but more importantly, a vocal recalibration from some quite prominent economists in China about the challenges that Chinese economy faces, the realistic targets that we should be seeing. And one big concern there will continue to be consumption. Just to hit back on that theme, this big question for next year: can the government get people in China spending again? That's going to be absolutely key to try and offset some of the effects of a looming trade war with the US. US. If we see the US and other economies and other governments around the world pulling back on their exports from China, it becomes all the more important that Beijing can actually restore confidence at home, can really boost that domestic at home to help make up that shortfall. If we think about the three pillars of the Chinese economy, property still in the doldrums. They've struggled to kind of reignite that there. Exports potentially facing these headwinds. So it's really domestic demand that's key.
Government and economy correspondent Rebecca Chung-Wilkins, great reporting as always. Great to get you on, Rebecca. Thanks.
You know, Jen, it's interesting because to build on what Rebecca was just saying, if you look at the main sectors that are underperforming today with the Shanghai Index, they are the real estate sectors and the consumer staple sectors. So the exact sectors that authorities are trying to beef up. So bear that in mind. All right, this is a look at other futures, not doing a lot. But when we come up, we're going to talk about drought insurance and why some African countries are turning to non-traditional insurance.
This is Horizons Middle East and Africa. Our top stories this morning. Russia is said to be close to a deal with Syria's new leadership to keep two vital military bases in the country. We'll bring you the latest next. Our next Africa segment looks into the drought insurance that could leave millions without food. And pro-EU protests in Georgia have entered a third week with more unrest feared, with the ruling party set to appoint a loyalist as the country's next president. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zapasaja in Johannesburg.
And I'm Joanna Versace in Dubai, where it's just gone 9:30 a.m. Welcome to the second hour, the second half of Horizons Middle East and Africa. It's been quite the week, Jen. Lots of data to piece through. Also central bank meetings yesterday.
Of course, central bank meetings, and we also got that PPI. You were reminding us about some of the details of the PPI, but it is nice to beat Friday. Let's just take a look at where markets are positioned. The eggs, I know. Thank you for reminding us. We needed that reminder. Let's just take a quick look at where markets, though, are positioned ahead of the trading day. U.S. equities, as we've talked about, they're little change right now. S&P futures not doing all too much, but NASDAQ futures up just about 0.3%. Significant because we did see U.S. equities closing in the red on Thursday. NASDAQ in particular closed down almost 0.7% after we did get that hotter than expected PPI, which mostly came in line higher than expectations. Futures, though, looking like they're potentially starting in the green for today. Iron ore also a focus. We were just speaking with Rebecca Chung-Wilkins about some of China's economic plans coming out of that meeting. Apparently not doing enough to support iron ore. Right now down more than 2.65%. Really a victim, apparently, to the disappointment we're seeing amongst traders right now at about 103. And gold, I think it's a bit significant to spotlight gold up about just 0.2%, though. But significant here because on Thursday we did see gold dropping more than 1.4% before pairing that drop. That was its biggest drop in about 2 weeks, but have seen that changing. And if we just take a look at gold, look at that upside. Despite the downside that we did get on Thursday, gold still set to notch a weekly gain following that optimism that we will see a cut from the Federal Reserve next week. So right now sitting at about 2,687. But as we mentioned, let's turn to our next Africa segment. Some African countries faced with climate-related disasters are turning to a non-traditional insurance product known as parametric coverage to help with their recovery. In these countries, the payout is agreed in advance, and it is only made when a specific event is triggered, like a vital food crop failing from lack of rain. But just missing the threshold means there's no payout, even if the losses are significant, causing critics to raise concerns about vulnerable communities being left without support. Bloomberg's Antony is joining us here in the studio now. So, Antony, talk to us about why these African countries are turning to this form of insurance and maybe how it's different than other insurance policies that we've seen.
Thanks, Jennifer. They're turning to this form of insurance because basically climate-related disasters in Africa are becoming more and more frequent. Droughts are more severe and they're occurring every few years rather than every few decades. Now, there's been a lot of talk over the last few decades about African countries getting a lot of aid from developed nations, which did contribute towards climate warming, which has caused the warming planet. And that hasn't arrived, so they've had to find a solution. So the African Union, which represents the 54 countries in Africa, has an arm which provides climate insurance. However, it's used a parametric model, which is different from the standard insurance you and I would take. Basically, it's very easy to administer because a country like Malawi, which is one we focused on, will set perhaps a minimum precipitation or rain level of X many millimeters a year, and if the rain comes in below that, then they will get a payout. But if they miss it by just 1 millimeter, there's no payout, which means people are still hungry, the crops failed, but there's no money.
Can you give us a sense of what opponents and proponents say works about this and maybe doesn't work about this?
Okay. The positives are it's very cheap and easy to administer. Normally, when you have a standard insurance product, somebody has to come around, an assessor, and check the damage, the real-world damage, and then they'll make a payout. There may be an argument between client and insurer, and they'll come to an agreement. In this case, it's based on satellite data or data transmitted by ground stations. If you hit the target, then you get the payout. If you don't, you don't get it. So they can pay out on, it's sovereign insurance, paid out to countries, can be paid out in as little as 10 days, which is very, very quick. But downside is you may not get the money.
Well, and the downside also is climate finance, which is something we've been talking about. I know you've covered quite a bit. Is still not being tackled in the way that we're hearing from these countries, right?
Yes, critics are basically saying this is a cop-out by the rich nations. Basically, they're providing insurance rather than real aid. And companies based in the West, we've mentioned them in the story, Generali, Hiscox, companies like that. They're reinsurers. They're working with the African Union. They're making a handsome profit out of this.
Right, of course, which is something we talk about a lot with insurance. We're going to leave it there. Bloomberg's Antony's Cuisine, thank you so much for your time, and you can find Antony's story now available on Bloomberg. But now for a look at some other stories we are following from around the region. South Africa's finance minister is calling on the G20 to reassess its system for restructuring poor nations' debt because it doesn't consider the full extent of their burdens. He says the common framework doesn't deal with the challenges of debt service costs. Both debtors and creditors have heavily criticized the G20's blueprint as being too slow and politically fraught. The International Monetary Fund says it's open to renegotiating Ghana's $3 billion financing program with the incoming administration, provided accompanying reforms aren't jeopardized. A spokesperson said its primary focus is to support Ghana in restoring economic stability and ensuring debt sustainability. Ghana sought IMF help after debt ballooned, hitting almost 100% of GDP by the end of 2022. And Access Bank has offered to acquire South Africa's Bidvest Bank holdings for about $159 million. The deal would take Access, Nigeria's biggest lender by assets, closer to its 2027 goal of becoming one of the continent's largest lenders. It currently has operations in about 23 countries, including the UAE and the UK. And for more stories like this from the continent, be sure to subscribe to the Next African newsletter on the terminal and our website. And of course, our podcast available on Apple, Spotify, and wherever you usually get your podcasts.
And coming up, French President Emmanuel Macron says he will name another prime minister this morning. We get the latest next. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasadja in Johannesburg. French President Emmanuel Macron says he will name a new prime minister later this morning as he looks to form a stable coalition of moderates. Let's get more and bring in Bloomberg's Stephen Carroll, who has been covering this for us. So, Stephen, Macron's deadline expired yesterday. Why are we still waiting for him to name a new PM, and will we actually get it?
I mean, look, another day, another deadline from Emmanuel Macron. He had told party leaders on Tuesday during the discussions that he's been holding since last week that he would name someone by yesterday afternoon. But as he landed, he'd cut short a trip that he was making to Poland. We all thought that he was going to try and make an announcement in time for the evening news yesterday. But as his plane landed just outside Paris, we had the news from the Elysee Palace that, in fact, he wouldn't be making that announcement until today. So keeping us guessing, is it because there were last-minute negotiations with those those parties over which of the candidates that he's been thinking about he's going to appoint. That's something that we might find out later this morning. The same names are being talked about when we're thinking about who Emmanuel Macron might pick to replace Michel Barnier. The goal, of course, is to try and unite what is a very fractured National Assembly in France. That's what felled the previous Prime Minister Michel Barnier. Those names still floating around, the likes of François Bayrou, who's a centrist politician, been around in France a very long time. Sébastien Lecornu, the current Minister for the Armed Forces, part of Macron's own camp. And from the centre-left, lots of focus on whether or not Macron can win over the Socialist Party deputies in the National Assembly. So Bernard Cazeneuve, a former Socialist Prime Minister, a name in the frame there as well. And another one was added to that mix yesterday, another former Macronist minister, Roland Lescure, who was the industry minister under the past two governments of Emmanuel Macron. He's another person whose name has been put in the frame as well. Of course, the goal here is to try and bring together any sort of working minority, as it's likely to be in the National Assembly, to get the budget passed. We know that's what felled Michel Barnier, despite his legendary negotiation skills. So the clue or the goal in picking this person is to pick the right person that can bring together the centre-left parties along with the centre-right. That's what Emmanuel Macron has been aiming for, and hopefully we'll know in a couple of hours' time.
And Stephen, could we potentially see Marine Le Pen soaking this up or taking some benefits off of this? I know she spoke to our Francine Lacroix and said Macron should not resign at this point. But what, if anything, does this all mean for her?
This has been a very careful game being played by Marine Le Pen's party. Our colleagues have some fantastic reporting out of our Paris bureau this morning about how those last-minute talks with Michel Barnier over the previous budget went down, that Marine Le Pen and her party had demanded more changes, which they secured, and Michel Barnier had said that in his announcement that he was going to ease up on one of the measures which was designed to reduce the reimbursements for medicines by the French state. He accredited that to a demand from Le Pen, which we thought, or at least he thought, was going to be part of the calculus, which meant that Le Pen's party wouldn't vote down the budget. Of course, they did. That was why Michel Barnier's government fell. And this tells us how cleverly or how closely Marine Le Pen is trying to control this situation. However, if Emmanuel Macron were to succeed by getting this coalition of centrist parties together, he hasn't spoken in his discussions to either the far left or the far right parties. So if he manages to create this coalition of moderates in the middle, he will be able to proceed, or his next prime minister will be able to proceed with the budget without Marine Le Pen. She very much has her eyes on the next presidential election. Emmanuel Macron says he won't resign before the end of his term in 2027, but Marine Le Pen is in pole position. If a legal ruling that's due in March, where prosecutors have sought a ban on running for office for Marine Le Pen, if she's found guilty in an embezzlement trial for funds as well. So that's something that's in the back of mind as we're thinking about what exactly could happen in the coming months in the French election. Marine Le Pen very carefully positioning herself for the next race to come, which of course Emmanuel Macron cannot run in.
Bloomberg, Stephen Carroll, always great to get you on. Appreciate you waking up early and pulling double duty for us. Thanks so much for joining this morning.
Well, there are fears the post-election crisis in Georgia could escalate as the ruling party prepares to appoint a loyalist president tomorrow following weeks of pro-EU protests. The country has been in upheaval following parliamentary elections in October, which the opposition, led by the current pro-European president, called illegitimate. For more, let's go to Bloomberg's Greg Sullivan. Greg, so who is likely to be named president? And what does that mean in terms of what will happen with the current president?
Well, the ruling party, the ruling Georgian Dreams Party candidate, Mikhail Kavalashvili, is a former football striker and current lawmaker who they've named. It looks likely he will get the nod, as it's an electoral college with all members of parliament, which of course is led by the Georgian Dream Party. What's interesting here is that the current president, the pro-European Salome Zurabichvili, has said that she has vowed to remain and will stay and remain the voice of the nation. She has actually called for protests, calling the election illegitimate, and has helped spur some of these protests. So it does appear that there is some sort of clash being set up between these two potential presidents. Whether that's rhetorical or legal, that sort of remains to be seen.
Yeah. And what does it mean going forward for Georgia's path? I mean, the fact that they're choosing somebody who is sympathetic to the former president's or current president's ideology, what does it mean for sort of the social uprising that is taking place? And how likely is it that the demonstrators back down?
Well, that is a great question. The parliamentary elections that were held in October were very much about that deeper question of what is Georgia's path? Is it an EU-aligned path? The opposition party was very sympathetic and strongly supported the country's EU and NATO ambitions, or would it be more aligned with its neighbor of Russia? The ruling party, having won that election, did suspend EU membership talks until 2028. So that also helped prompt the protests. But that is the central question that the nation has been dealing with, and what a lot of protesters are taking to the streets over. The current president, Chile, has said that she actually criticized the elections as a Moscow operation for control to try and draw the nation closer. So that really is the central question, and we're seeing it playing out here.
Yeah, most definitely. Bloomberg's Greg Sullivan, thank you so much for the reporting. Now, for a look at some of the other stories we're following, Bloomberg has learned that Italy is planning a business summit in the Gulf region next month to promote its Mattei development and migration plan for Africa. It wants to host Gulf state officials as well as business leaders as it seeks backing from oil-rich nations in the region. The program is aimed at boosting investment, training, and food and energy security in Africa with the goal of slowing migrant arrivals by sea. And Donald Trump's economic advisors have told Bloomberg they are considering doubling the U.S. state and local tax deduction known as SALT. Economist Stephen Moore, a member of the president-elect's transition team, says the tax break could go from $10,000 to $20,000. The deduction is popular in high-tax states like New York and California, but is expensive to maintain. And it all started with a viral video of a British man attempting to eat fire chicken noodles 10 years ago. Now the popularity of Buldak instant ramen has propelled the South Korean boss of Samyang Round Square and her family into the Bloomberg Billionaires Index. CEO Kim Jong-soo came up with the idea after she saw people struggling with eating spicy chicken stir-fry at restaurants. Low productivity and failure to invest have led to vast amounts of lost growth in the EU. With France and Germany in political crisis, the continent risks more lost years of stagnation.
The news for Europe just keeps getting worse.
The French government collapses, plunging EU's second largest economy into turmoil.
France's political upheaval in December offered another glimpse at fractious European affairs.
Germany's under pressure and Volkswagen workers are striking hard.
In my view, we are already in a crisis mood.
Our former model is over. If we follow our classical agenda, we will be out of the market, I have no doubt.
The EU's economy is now fighting for survival and struggling to keep pace with the US and China.
Had the European economy grown as fast as the American economy over the past couple of decades, we'd be generating 3 trillion euros of extra income every year.
That's roughly the equivalent to the total GDP of France being routinely added into the economy.
Europe needs to have a digital era economy with companies that challenge those from China and from the US.
Without that, the region's at risk of being unable to afford to protect itself in a world where security is no longer guaranteed.
It's just a very tense moment for the world, and Europe's at the center of it.
Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The identification of a mysterious illness that's caused dozens of deaths in the DRC has been delayed as authorities struggle to get the remote samples to a national laboratory for testing. The illness, dubbed Disease X, has reported over 500 cases since late October, primarily affecting children under 5. For more, let's bring in Bloomberg's consumer and healthcare reporter, Janice Q, who is here in Johannesburg with me. So, Janice, you've been watching this very closely. Talk to us about the delay in getting some identification. What's happening here?
As you said, good quality samples is key here. And Congo is about the size of Western Europe. It's largely covered by jungle. The roads are not in good condition. And in the rainy season, they become impassable often. So the first lot of samples that did get to the lab were just not of adequate quality to make any proper diagnoses. They have sent a second team in, but in a country of that size, where you are looking at a region where the epicenter is, if you do not have laboratories that are adequate, in this case there are no laboratories, but if you do not have one that's adequate to run these kind of tests, you're going to run into problems. And that's a big drive of the Africa CDC now, is working with the government to try and make sure that they can get labs up in a variety of parts of the country.
Not to mention, you and the team have talked about the remoteness of this and just how far it is from the labs. Do we have any sense of when we'll know whether or not this is a novel pathogen of concern? I mean, have they given us any timeline?
The new samples should reach the capital by Monday. They are looking, their efforts underway to try and get airplane transport for at least part of the journey. You have referred to the distance. I mean, it's about 700 k's, but from where the epicenter is to the capital, where the national lab is. But it's actually not just 700 k's. It's the 700 k's that can take 2 to 3 days. And when you've collected, blood and urine samples, there's a time limit. You've got to run those quite quickly. So cold chain becomes incredibly important in a situation like this. The new team is not only very experienced, they've collected almost 5 times more samples, and they've gone in with cold chain, adequate cold chain options.
And so then, where is the Africa CDC at this point? You've spoken to them, you speak to a lot of WHO officials. What are they saying about whether or not this is actually a public health concern for Congo?
In Congo, it certainly is. What we do know, and there's a lot we don't, but one of the things we do know is that the most severe cases and displaying the most severe symptoms are people who are severely malnourished. A lot of them are children. And so that is incredibly concerning. In fact, malnourishment in this particular region has become an acute problem in the last 4 months. But it's a problem over the whole country. And that region alone, while it's very, very remote, it's got about 200,000 people that, again, don't have access to a lab to get these tests done. But, if that were to spread to the rest of the country, when you're looking at food insecurity as a major issue, it does make it very concerning.
In a country that's also dealing with Mpox as well, which you've covered.
And malaria and cholera and all sorts of yellow fever. They've got a lot going on.
Well, Bloomberg's Janice Q, appreciate your reporting on this and following this for us. Thanks so much for joining us in studio.
Jen, I was just taking a look at how equity markets have performed for the week. And even though we're talking about the downtrade this morning for Asian equities, for the week, though, the Shanghai Composite has actually done pretty well into and out of this working conference. So that's important to note. And even the S&P is actually leaning negative. So we've pulled back from those all-time highs. The focus, obviously, Jen, is going to be that Fed meeting next week. Not just whether they cut by 25 basis points, but actually the signaling that they're going to give around the rate cut cycle into 2025. There is an expectation that they're going to revise upwards those dots. So that's something to watch out for. And then over in Europe, obviously, people are watching the developments closely on the ground politically. We're waiting for the French President Emmanuel Macron to name who the new prime minister is going to be. That person has the work cut out in terms of managing to maintain the support from both the far left and the right in France. And then you speak of some of the growth dynamics, the headwinds facing the European economy as well. ECB alluding to that yesterday, and also changing the language vis-a-vis restrictive policy. So again, something to think about as we head into 2025. But Euro Stoxx futures today down 0.3%. For the week, though, Euro Stoxx is actually up 0.3%. But that is it from Horizons Middle East and Africa. I'm Joanna Versace in Dubai with Jennifer Zabazaja in Johannesburg. We spoke about everything, including, Jen, the price of eggs. Stay with us for Daybreak Europe.
We had to.
This is Bloomberg.